lot of parents that ask me questions about how do I help my kids, and they're not kids anymore, they're like in their early 20s. How do we help them buy their first home?
Good question, Hanif, because, times have changed. When we first bought a house, property prices were lower and incomes were lower.
Yep.
Now property prices have increased significantly and our wages haven't increased in tune with that.
Very unusually, I'm going to ask Jeremy, our video producer, to come and sit in this chair because from his curious perspective, we'll have questions to ask that I don't.
Yeah, good thing I got my hair cut last week. What are like some of the common things that can have a big impact on your credit score that people might not be aware of?
What most people don't know is that there are now some incredible opportunities available that'll help first homeowners get into their first home. I've solved the problem for you. Come and have a listen to this. I've invited Paula Abbott from the finance agency to come and tell us about the ins and outs of these opportunities, how they work, how you can participate, and really how surprisingly easy it is. Come and have a listen. Let's talk about you to start with.
Oh, well, we've only got an hour. No, we don't.
Will it take more than an hour to talk about you? God, good
No,
God.
because I don't give anything away, so I don't even know why I'm here. I've got nothing to say about me.
Haven't you? Well, who's Paula Abbott?
A mum and a
mum.
finance manager,
There you go.
all rolled into one.
But you've been doing finance for a long time.
I have 37 years
Really?
in the finance industry, broking 25 years.
You've seen it all.
Seen quite a bit, Hanif, quite a bit. Seen from when interest rates were up around the 18 to 21%, going down to what we saw a few years ago, 1-2%.
Yeah, what an amazing ride.
It was. Good on those guys who fixed in at those rates.
Yeah, I reckon. 1%. Wow. I specifically asked you to come and have this discussion because there are a lot of parents that ask me questions about how do I help my kids, and they're not kids anymore, they're like in their early 20s. They say, how do we help them buy their first home?
Yep.
And there's very, very shallow awareness of what's available that I think is unreal and incredibly awesome.
Yep.
And a great opportunity in the way of government schemes and grants that can really help you along your way relatively easily, and they just didn't know about it. So I thought, let me ask a real expert to share some thoughts and some possibilities that people can latch on to and go, yeah, actually, maybe my 20-year-old can go and buy the house. Or, equally, as you know, I've got clients that are young and just want to go on their own.
Yep.
They just want to know, how do we actually do this?
Good question, Hanif, because, times have changed incredibly. So we were looking back when we first bought a house, property prices were lower and incomes were lower.
Yep.
Now property prices have increased significantly and our wages haven't increased in tune with that. So that's made it really hard for our older kids or children of today to get into a house. And there's some great incentives there through the government, which just changed recently on October the 1st. It was called the First Home Guarantee Scheme and it's now called the oopsies.
Look it up. It's a government thing, right? Every second day they change the name of something just to cause confusion.
It's called the Australian Government 5% Deposit Scheme. So effectively what that means...
Hang on a sec. Do they attach an acronym to that? Just to make life easy?
No, they don't. We'll just have to make one up, Hanif.
Good Lord.
Yeah, that's okay. We could make it up as a AGDAS.
It rolls off the tongue.
It rolls off the tongue. So this is a scheme where people over 18, first home buyers haven't bought a home within the last 10 years. That's actually an important one. People think it's actually just first home buyers, but if you haven't had a property within the last 10 years, owner occupied, you could be eligible for it again. So there are restrictions around that, and I would suggest that people just ring the first home buyers to find out if they're eligible for it. So that's one big one. So really it's a 5% deposit that under this particular scheme that we're looking for to purchase a home with no lender's mortgage insurance. So that's really important because lender's mortgage insurance on average at the moment first home buyers would be saving around $20,000 to $25,000 on a median purchase price.
That's huge.
That's massive, absolutely massive. So there's restrictions around it, such as you have to have 5% genuine savings over a 3-month period.
But what does that mean?
So that
What's
means
genuine savings?
Genuine savings. The lenders actually would like to see constant contributions going into a savings account in the purchaser's own name. However, if they had a gift or an inheritance or something like that and they received it, as long as that sat in an account, like if they received that in one lump sum and that sat in an account for 3 months, that is acceptable to a lender as well. So whilst we say they like to see contributions, they do, but it can come from elsewhere, but it's got to be sitting in an account for 3 months.
And some of the lenders will, if you're young and you've been renting, they'll count the amount of rent you paid in those 3 months towards genuine savings, won't they?
Yes. So just to clarify, and people do get confused about this, so you still actually have to have the 5% genuine savings in hand, but if you can prove that you have been renting, that takes away the genuine savings criteria. So what it actually means is that they don't have to see the continuous deposits. So if somebody gifted you 5% and you had it there, then the lender will actually take the rental as their contribution.
Yep.
Yep.
So to summarise, if I'm a first home buyer, all I need is 5%.
Yes.
To get in the door.
To get in the door, yes, you do. You've got to be aware of other costs involved as well, like settlement agent costs and any other costs. So, but yes, just to get in the door for a lender, 5%.
Stamp duty. When does that kick in? Because there are exemptions for stamp duty.
Yes, so
the stamp duty concessions then,
yep.
I believe, if you're buying a property up to $500,000, you pay nothing.
Correct.
Which is awesome, but you know, how many properties can you buy like that? Could be an apartment.
Yes.
And from 500 to 750, there's a concession, but it doesn't appear to be much.
No.
And that'd be 850 regionally. And anything above that is just normal stamp duty.
Normal stamp duty, correct, yeah. So the higher you get towards the 750 from the 500, the smaller the concession is. Obviously, it goes on a pro rata basis.
Does it matter whether you're buying an established property or does it have to be new?
No, but that's an interesting question because if we're talking established properties, it's going to be the same on established or new, but the new property brings into account the first home grant, which is a $10,000 grant given by the government on a new property or a property that has never been resided in. So it might be a newly built property that hasn't been, or it could have significant renovations and you get the $10,000 grant from the government on that particular one.
Yeah, great.
But it has to be assessed if it's been fully renovated, and that's up to the Department of Finance to assess that.
So what if my income, well, there used to be income thresholds. So if you earn over a certain amount, you were ineligible, but they took that away now.
They did. As at the 1st of October, they've taken that away. They've also taken away the capping for how many places there are. There's no capping on places.
Oh, wow.
So it opens up.
So anybody, regardless of how much you earn, if you're buying your first home, you're eligible. I mean, there are some other criteria, but generally you're likely to be eligible.
Yep.
You only need 5% deposit.
Correct. Yep. Fantastic
that's
way
a
to
gift,
get
right?
It is fantastic way to get into the market. Yeah.
It gets better, I think. I didn't realise that for single parents now, you only need 2%.
Yeah, correct.
Deposit.
Yep. So 2% no mortgage insurance, that is waived. And if you have actually owned a property previously, you still are eligible for this one. This is coming under the single parent stream guarantee.
Wow.
Yeah.
That is actually genuinely a useful thing for people.
That so is. Being a single parent would be so difficult, and this is just a way in for them to be able to put a roof over their child's head.
Yeah.
Yeah.
Wow.
Which is amazing.
That is amazing. So what else is on offer and what else has changed?
The HBAA, which is the Home Build Buyers Association of Australia, they gift. Well, this hasn't changed. The threshold on this has changed. Used to be $2,000 for a purchase over up to $400,000, and that's just a refund that comes after settlement, and that's just to help with any out-of-pocket costs with settlement agent fees, any bank fees, anything to do with it, up to $2,000. A lot of people don't know about that one, but every dollar counts for first home buyers. So that the threshold of that has increased to $500,000. So probably not a big one, but for people who are looking at purchasing units or up to $500,000, that's an extra $2,000 back in their pocket.
Oh, that's handy.
Yeah.
And some lenders still offer, let me just call it free cash for first home buyers
Yes.
as an added incentive.
Yes, they do. There's only a couple out there at the moment, but they do. And certainly when you talk to your broker, that's something that they can actually help with and guide you, because it's also really important to be guided as to which lenders participate in these schemes, because not every lender participates with the government schemes. So there's only specific lenders. So that's really important information for first home buyers to understand and know that.
Yep. And if, let's say, I don't have a high income and I'm young and my parents say, well, we could support your loan if you want. We could be guarantors. Is that still possible?
From a securities perspective, Hanif, yes. From a servicing perspective, no. So what that actually means is if they don't have a high income, they still have to actually service the loan. But so the parents' income will not actually help that.
Okay.
Yep. There's no servicing guarantors left anymore. But from a security perspective, it's actually a really good option as well, because this is if you go above, say, the pricing cap of the property being $800.
That's for stamp duty.
Sorry, no, $850. So
In Metro?
Metro, yep, regional $600, whereas it used to be $600 Metro and $850. Used to be $600 Metro before, it's gone to $850.
God, that's good.
Yeah.
It really opens it up, doesn't it?
Yeah.
But it doesn't matter, because that matters. If I'm going to be a security guarantor for my child, which likely means they're going to buy something above $850,
Yep.
I'm not going to be eligible for the government scheme, am I, anyway?
Correct. So that's the beautiful thing about family guarantee as a security. So purchase prices above $850,000, the parents can offer up their property, and the beautiful thing about it these days is that it's a limited guarantee. We can limit it to 20% plus fees, stamp duty fees or anything like that, whereas back in the day that I was originally started, parents had to put up their whole property and it was open.
Wow.
So that has been a big change that I've seen over the years, and I think that secures the parents a little bit more, and we tend to see a lot more parental guarantees going up now than previously.
That would make sense. So just for the sake of clarity, that security guarantee, does that mean, let's say you're my mum? Yeah, I know, that's weird, isn't it?
That's very
weird. You look like you could be my mum. Right? Let's just say Paula's my mum. It'd be funny, isn't it? Wouldn't that be weird? So you're my mum. I'm going to go and buy a property, and we had a family discussion and said, look, I know it's $1 million, but it's worth it. You should buy it. I can afford to service the loan of $800,000, let's say, so it's 20% difference, but I don't have 200,000 plus stamp duty for the deposit.
Yep.
I've only got 50 grand in my bank. So are you saying to me, you could say to the bank, hey, I'll put up my house for that 20% plus costs, and it's only limited to that?
Correct.
So my son over here, who looks exactly like me, can go and buy that house for $1 million.
Yep.
And then...
And he can service the loans, the total.
Yeah, so my income isn't enough
Yes.
to service the loan.
Yep.
And is that the loan of 800 against the new property, or is that the loan of 800 plus the bit?
It will be the 800 plus the bit. So
The bit that mum,
Yes.
which is you,
Yep.
guaranteed.
And each lender will do it differently. You can separate it, have separate loans. You can put it all into one. You can cross-securitise. Again, that's the structure that you'd be chatting to your broker about.
And as the property value goes up, then that guarantee can be released, can't it?
Correct, yes.
So it's not forever.
No. We are seeing probably on average, because we do follow-up people who've gone guarantors with
Yep.
our clients every single year to see, we try to look at the market and see when we can release them. We are constantly in contact and see quite a few guarantor releases going. I would say on average, and it's hard to ascertain this, but this is just through my experience, it's generally between 3 to 5 years.
Okay, that's
on
not bad.
releasing the guarantor, which is really good. But obviously there's outside influences such as the property increase in price and things like that, so that the equity is available to release.
So it's not forever,
No.
but it's another great way in.
A fantastic way in, yep.
So is there anything that you hear in terms of questions that people commonly ask that you think we should share?
Oh.
What are people worried about with these things?
With regards to guarantors or getting into the property?
Getting into
market?
property.
Really, they're so keen and enthusiastic, the ones that we see, and it's absolutely brilliant. Yes, I think most of it is the not knowing what's actually out there for them and the best way forward. So, and the budget. So we quite often will get clients come to us and say, we've got this amount and this is our income. What do we need to do? So is it a case of being able to increase their income and that's what they need to work towards? Or is it a case of them being able to save a little bit more or a case of both? So that's probably the biggest questions that I think it's not fear because they're absolutely excited, which is brilliant. It's just the unknown. They really just don't know what's available to them.
So they just reach out for guidance to start with.
Yeah.
And I'm imagining that in some cases they're right to go.
Absolutely.
They just didn't know that there were pathways.
In most cases, we can actually find a way forward for them. I'm not a big fan of it. There is also the property share, which is a 2% through Key Start. You buy 70 to 80% of the property and then you own that with the government, and you do have options to purchase throughout that period of time part of your property back. But you do have to be aware that in the increasing market that it is, if you were to sell, that you will still only retain that 70 or 80% of your property. So the government also gets the growth on that. So that's just another little one. I personally am not a big fan of that. It is there just in case people can't get in through the other streams that are available. So it is good that it's there. It's another option that people won't know about, where people can't get in through the other streams of schemes that are available.
You did touch on a question, and I think we should answer it. What are people most concerned about when it comes to being a guarantor? What do you hear?
Risk. What happens if there's a marriage breakup or somebody loses their job? What will happen to the parents' property? What is the risk factor there? But generally speaking, the parents who are going guarantors have got a lot of equity around them. They're quite strongly asset-based, and there's procedures in place to make sure that people's properties aren't being put at risk. So some lenders will ask for a solicitor's clearance certificate to be signed, some won't, but under the regulations, lenders cannot actually lend to a big risk to put that property of the home owner
At risk.
At risk.
Yeah.
Yep.
So there are some checks and balances in any case, but you do need good advice.
Absolutely.
And you do need to absolutely understand what you're getting into.
Yep.
And a lot of the banks these days will actually get you to see a lawyer independently so you understand your obligations.
Yes. Interestingly, last week or a couple of weeks ago, we had a client coming in and we were going to look at the first home guarantee scheme, now the 5% Australian deposit scheme, and wasn't quite there. They're very keen, have looked at properties. We just ran past the idea of a family guarantor. They said, no, we want to do this on our own. Then they've been looking at prices again. Prices are higher. They've had a family discussion and everybody's really happy, and that's the way they're going to actually proceed. So they had no idea that was even an option. And the parents are very happy. We've had discussions with them and also the purchasers.
So if I was to summarise, if I'm a first homeowner, well, no, I haven't owned a home before, but I want to go and buy one. All I need is 5%.
Yes.
Unless I'm a single parent, and even if I have owned a home before, I can do it with 2%.
Correct, yep.
So that's fantastic to start with. There's lots of intricacies, but don't worry about that for the moment. Just go speak to Paula. Let's say I come and see you and we say, yeah, actually, I've got 5% or the equivalent. And you go, great, tick that box. I'm eligible for the scheme, tick that box. What's a bank going to look for from me? What do they need to see?
Good question, Hanif. They look for stability of residence and also employment. Residents, they like to see stability for 1 to 2 years and previous stability before that.
What does that mean?
At the same address for 1 to 2 years.
But it doesn't matter if I've been living with mum?
No, that won't matter as long as it's been for a period of time. They just don't like to see you moving addresses, every 6 months or something. That doesn't prove stability. And this is because everything goes into what we call a credit score, Hanif, which is behind the scenes. So each bank credit scores differently, and if your credit score, it can automatically decline if it's a low credit score, and then there's nothing that we can actually go back to the bank with on that. So that's one thing that they're looking for.
And while we're on that, if you've had credit cards or car loan payments and you've missed them or not paid them, that's going to be an issue.
Absolutely. And another big thing is afterpay. A lot of kids these days do afterpay, and they've got to make sure everything is on there, because there's another credit report that we get generally from Equifax, the lenders use, and each late repayment and everything actually shows up on that, and that will affect the credit score behind the scenes that the bank does as well. So really important if you're looking at even purchasing or getting a loan of any sort, even if it's a personal loan or a credit card, you've got to make sure that even utilities these days as well, you've got to make sure that everything is paid on time.
Yep, great. Sorry, I interrupted you.
No, you didn't. Oh, you did. Now I can't think of my train of thought. Employment. Employment is actually another one for stability. Some people are on probation. Generally, if you start a new employment, you're on probation for 6 months. That's fairly standard across the board now. Most lenders accept it. A few still don't, still are in the archaic days of waiting for that probationary period to finish. And that's fine. That's their policy. So that's all good.
Casual employment's fine?
Casual employment is fine, except for it does need to be, please be aware, it needs to be at least 6 months with most lenders, because they will not accept it. And most casual employment is also shaded at an 80%.
What does that mean? We're getting technical here.
Yeah, sorry. It means only 80% of the income is actually taken into consideration across most lenders' policies. Again, we have exceptions, so we know which lenders to work with, particularly when it comes to casual employment. Casual employment would also generally be taken over a 48-week period rather than a 52-week period, because there's no annual holidays or anything in that.
What about when we talked about residency? So you can be a citizen, a permanent resident. Outside of that, if there are other visa class holders, are they eligible for any of these schemes?
No, they're actually not, Hanif, not as these schemes. They would actually need to come under other lending, particularly with different visa holders, but there are lenders who will actually accept other visa holders.
Great.
But under these schemes, no, you do need to be an Australian
Is there
citizen.
anything else at a high level that bank will look for from me? So we've got permanent residency or citizenship. We've got stability in employment, decent credit score. So if you've got debts, you pay them on time.
Yep.
That's pretty important. They want to know if they're going to get paid back. Is there anything else?
No, that would fairly much be covering off on most of the criteria that the banks look at.
It's relatively simple, isn't it?
It is very simple.
On the surface, I would say it's relatively simple,
Yeah.
and I know you guys keep it simple, but behind the scenes, there's a whole bunch of complexity, which we won't go into, and technicality that needs to be addressed.
Yep.
Yeah.
And that's what we're here for, to address those things behind the scene to help people get into their first home.
Yeah, and every lender's got their quirks, don't they? This
Absolutely.
bank is great for these things, but doesn't like this, and this, but this other bank will accept them, but doesn't like this, and this. So you can consult with the client
Yep.
and know where they fit.
Yep. And two other really important things is with the different banks' policies is the interest rate. So under these schemes, some of the lenders will still price it at a higher rate and some will still price it as an 80% lend.
That's really important, isn't
That
it?
is really important. It could mean hundreds of dollars difference in monthly repayments for you with regards to the rate. So that's really important. But in conjunction with that, we also have to have a look at the people's incomes and see every bank has its different borrowing capacity, servicing levels. So we actually have to look to see, okay, Bank A might lend $500,000. Bank B might lend $600,000, Bank C might lend $650,000. So really it's having the conversations with the clients to see what suits them, because that bank might have the higher rate. So we really need to ascertain what property price they're looking for and what lender to put them with, because that is so important. The disparity in range of servicing is amazing between lender to lender.
Yep. So it really is, there's no one fits all model.
No.
It really is, everybody is an individual, and you have a look at the circumstance and make sure whatever is being recommended is totally suitable.
Absolutely. I love that, because everybody is an individual and that's how they deserve to be treated, Hanif.
So, Paula, as very unusually,
Yes, very unusual.
because I'm very close to these things, so I'm going to ask Jeremy, our video producer, to come and sit in this chair, because from his curious perspective, will have questions to ask that I don't, and he is in that position of being somebody who potentially is a first homeowner and he doesn't know the ropes.
Yep.
So maybe this is a wonderful opportunity for him to actually ask some questions that I wouldn't.
Love it. Bring it on.
I'm going to do the swapsies.
Thanks,
I'll
Hanif,
go
for
play
throwing me
producer
into
for a
it
minute.
again.
Yeah, right. I feel very powerful now.
Oh, do you?
I do, yeah. I've never been on.
That looks like.
Ah.
Yeah, good thing I got my hair cut last week. Jesus.
Oh, I meant to, but I never had time.
Well, you're looking
too.
good either way.
Oh, thanks. You
Also,
too.
I don't even know if we'll use this. I took issue with Hanif saying that you could be his mother, because frankly, I think it's the other way around.
Ah,
Your mother.
that's an issue.
But like Hanif was saying, like, I'm sort of at the age of where a lot of people would be considering these sorts of things. And one question I had was, if you're looking to get the first home buyers grant, do you need to live in that property? Because that's something that often gets asked.
Absolutely. Great question as well, Jeremy. Yes, you do. You need to live in there for 6 months within the first 12 months of the property being purchased. So it's got to be 6 months, whether it's the first 6 months or halfway through or the last 6 months, as long as you're there for 6 months within the first 12 months.
Yeah, okay. And is that are there any sorts of like funny things that people need to consider around that, even taking those guidelines of living in it in the 6 months of the first 12 months?
No, not really. I just think it's simple. No, nothing that pops to mind there, just as long as they do that, because when they're signing off for the first, for under the scheme, there is penalties that can be charged if they don't go ahead, knowing that they have to live in there for 6 to 12 months.
Okay.
You're going to ask me what the penalty is, and I can't tell you.
No, that's okay. Well, I was gonna ask a different question, not related. Just about debt in general, because people of this age will usually be carrying some sort of like a HEX or HELP debt. Where does that factor into what you'd be looking to borrow?
Yep. So previously, it factored in quite heavily. So it factors into the servicing. So we had to put that in as a debt. Lenders have only just started coming out over the last couple of months, taking this, that we can utilise it, but we put it in a different part of the calculator. It's actually assessed differently. So it's actually giving buyers more borrowing power. And a couple of the lenders have policies which have only just been coming into place. One came in this week with one of the lenders, whereby if we can prove that it is being paid out, some are 1 year, some are 2 years, depending upon the lender again, we do not have to include that as a liability.
Okay.
So that's actually quite a massive change that is coming about. That comes from a change in a government policy which has happened this year, and lenders are starting to follow suit. So it's not a black and white policy for each lender as such for me to sit here and quote, but it is there with each lender's taking a different stance on it.
Yeah, I was going to say, is it kind of like what Hanif was saying before, where, you know, each lender will sort of look at it, have a perspective on how that will impact your ability to make the repayments? Is that essentially what they're looking at?
Correct.
Yeah.
Yes. So it will, depending upon how much the HEX is, when it's going to be paid out, will determine how much that person can borrow under each particular lender.
Yeah.
In treatment, in the ways that they treat HEX.
Yeah, okay. And related, and you touched on this before around your credit score. I wanted to just take a deeper dive into things because what are like some of the common things that can have a big impact on your credit score that people might not be aware of? Like you mentioned Afterpay, for example.
Yep.
Are there other sorts of things where, like, you know, just as an example, you might be like getting Uber Eats every day or something, or things like that can like have an impact on.
Absolutely. Yeah. So we'll talk about credit score first, and then let's talk about what goes through your statements, because that's two separate things to chat about, and really valid for lenders to have a look at that. So these are good points for you to bring up. Credit score, make sure that you pay everything on time. Even like I said, utilities, if anything goes to like a credit corp, everything shows up on your credit score these days, and that's not a good thing. So we talk about a credit score, and there's good, there's average, very good, there's high. You want to be in the good to, average upwards criteria. Anything under there really limits your opportunities with most of the lenders. There's still options available, but it makes it that little bit difficult for you. Afterpay, yes, make sure that you're paying all your Afterpay, credit cards, every home loan, utilities, all of that. Just make sure you pay everything on time. And don't do too many credit inquiries all at once. So if you actually go ahead and apply for a few credit cards in a row, all of that shows up and has the capacity to reduce your credit score, which impacts your borrowing as well. Yeah,
so just by actually checking what your credit score would be, is that what you mean? Or no?
No, so you can actually check what your credit score, and that doesn't leave an imprint on your credit score report. Yeah. So you can actually do that, and that won't affect your credit score if you do it personally. If a bank does it, that's a different story. That will actually... So what I'm saying is if you go and apply for a telephone or a credit card or an Afterpay, all of those things go onto your credit score. And if you have a certain amount within a very short period of time, that will have the capacity to reduce your credit score.
Yeah, and then ultimately could be like an instant, I don't know what you call like an instant sort of decline. Yeah.
It can be in certain cases. Yeah, absolutely. And it's really important to remember these things going forward. We have had one recently where some credit card repayments weren't made. months to 2 years ago, the credit card's been paid off, but it's still on the person's credit report, and it is proving an issue. We will get around it by mitigating certain things, but it's really important just to keep your credit, like everything, up to date and paid.
Yeah, okay. And I guess like in all around that, is that why it is useful to go through a broker? Because like if I was just going straight to a bank, I might not have that awareness of like how you can have mitigating circumstances and things like that. Like, so I guess I'm sort of voicing it, is the point of having one of the things that's beneficial of having a broker is you have almost someone advocating for you on your behalf. Is that?
Absolutely.
Yeah.
We've been in the industry for a long time. We know what to look for. We know what lenders will accept what, and we know what ones won't. We know which lenders will automatically decline a bad credit score if we go back to that instance. So we stay away from those lenders, and we take it to lenders before we even submit it with reasonable evidence and commentary around the situation, which we believe would be acceptable. We go to them and ask them to take it to their credit department first to have a look at. If they can, take it to their credit department first, and then we get the advice. We've got people who we can contact that the general public don't. So, yeah, use us because we've got access not just to one lender but all the lenders across the board.
Yeah, and like you said, those hidden lenders that, you know, me as the average person wouldn't be able to even access, right?
Absolutely, absolutely. And the other thing that you brought up, Jeremy, was what goes through your statements. I think you said Uber Eats.
Yeah, that's...
Absolutely. This is so important because it is under compliance, and lenders will ask for statements on not every single time, but again, we would know when they are asking for the statements. And when there's excessive Uber Eats or sometimes you see lotto or gambling or excessive going out, things like that, that will affect your what lenders call living expenses, and that will affect the amount that you can borrow as well.
Okay, and just going deeper on that, is it a sense like, are they qualifying certain things, or is it a sense of just matching it up to what your income is? So in other words, do they look unfavourably on certain activities like gambling or, you know, certain luxury sort of spending,
Yes.
I guess you could say?
Yes, they can do. So they would look at it and say, oh, you know, is this person overspending in this area or not according to their salary? Generally, they look at all living expenses across the board, and we know behind the scenes what they're looking for and what they're measuring it to. So we've just sort of got to have a look at that and mitigate those things up front too, which is another reason why I would use a broker such as us.
Yeah, okay. And is there like a limitation on the history of it? So is it sort of like looking like 6 months, 12 months, or like are we talking like 3 years sometimes?
No, thank goodness.
It's like you got to clean up. You got to clean up your act.
Yeah. I think it's that's a bit scary, Jeremy. Generally speaking, and again, it does change from lender to lender, but they would generally look at 1 month's transactions.
Oh, I see. Yeah, it's not. Yeah.
Over some can be 3. So it really does depend, but very important. Again, with loans, it will be 6 months. So you've got to make sure all loans and everything has all repayments on time within 6 months.
Yeah, okay. Yeah, so just having that track record of 6 months is generally what you'd want to be looking at.
Yep, for sure.
So if you're looking to purchase a home and you're going to go through a broker like yourself, what sort of costs would I be looking at? Number one, obviously for your services, but you mentioned obviously there's the, you know, beyond the actual loan, there might be some things I need to pay for example, like, you know, settlement costs and things like that. Could you sort of run through, like, it's always case by case, I get it's going to be different, but just making myself aware of like, oh yeah, I know I'm going to have to, you know, sort of
budget
for
that
these sorts of things.
Well. Yeah, absolutely. So our service doesn't cost. As brokers, we don't charge for our service. The banks pay us directly, and in no way or form is that added into the client's interest rate or fees. They pay us directly because brokers are a big source of income to them. So the client does not isn't charged anything in any way. And we've got documents that are extremely transparent because we need to be, that we go through and that they sign off on. But that said, just be careful. If you are using brokers, always ask the question that no upfront costs or service fee will be applied, because some can also still do that should they wish.
Oh, right.
Yep.
Okay.
Depending upon the transaction as well. So
Yeah.
always ask the question.
Okay.
Settlement agent fees, yes, absolutely. Again, it depends upon the purchase price, but I would say always allow something under 600,000. Allow maybe $800 for the settlement agent fee, up to say 750, 1,500, 1,200 to 1,500, about the mil mark. You're looking around 1,500. So that's basically on settlement agent fees. But settlement agents will charge their own fee that you will ring and get a quote, and do shop around, because some do actually give discounts, and we do have settlement agents who will pass discounts directly onto our clients rather than to us. So, yeah, do ask around and shop for that as well.
Yeah, okay. And is there any other sort of expenses I should be aware of to, budget in?
Removalists, if you get removalists.
Good point.
And under the settlement agent fees as well, you've got your pro rata water rates and land rates and things, but the settlement agents will go through that with you. But basically, you've just got to be, if you're purchasing, say the rates are issued in July or August, then you purchase in December, you'll have to pay pro rata of those annual fees.
Okay. Yeah. Just going back to the brokers, right? Like, how you said that you get paid by the banks typically, like assuming that there's no upfront fee. I've heard of a thing called, it's sort of like acting in the best interest. Could you sort of talk about that? Because like someone might hear this and assume, if you're paid by the banks, do some banks pay you more and therefore you're going to choose a different bank? Could you sort of walk us through that?
Absolutely.
Yeah.
I thought you were a producer. You should be doing my job. you know it so much, Jeremy.
I know a broker. So.
No, that's actually a fantastic question. It is, yes, best interest duty. And so we have compliance and we're regulated under this, and we have to make sure, to be honest, it really never particularly crosses my mind, because as the team we all work together I know we always want to put our clients first, and we are always looking for the cheapest option. If you were to actually ask me how much I was to get paid from each lender, I could tell you I really have no idea. I could look it up, but I don't. That's not what drives me. What drives our team is to actually have a look at our clients' needs and wants and get the best outcome possible for them. But we do have compliance behind that, so we do have to make sure that we are looking for their best interests, which is always rate driven, but also mitigating those issues at the same time. So sometimes when we can't get the best rate available for the client, let's say because it is a lower credit score or they haven't had something paid, we then have got to fight and negotiate with the lenders behind the scene the best rate available for them. Sometimes there might be only one option, but we're always very clear and transparent with our clients with regards to that, and we've got to give reasons surrounding that as to why we've only got one or two options and the reasons that have driven that rate.
Yeah, okay. So it sounds like, it's prioritising would be the rate, but then sometimes it's a case of, hey, there's these circumstances for yourself, so therefore, this lender might be a better option. Is that usually what's happening?
Absolutely.
At a real basic
to
level?
be honest, everybody's priority is to get the best rate and fees available. So sometimes you might see a low rate, but the fees are astronomical. So that actually outweighs. So that's really important that we do these, what we call product comparisons. So sometimes we might get a client that comes to us and says, we can get a 5.2% at the moment. We will look into it. And yes, it could be 5.2, but it really isn't. By the time you add in the actual fees and charges into it, they're better off going with, say, the 5.34% rate. And I'm just pulling these figures at the moment. But I had one the other day, and that was absolutely very true. So we did the table up and showed them. So
yeah, okay. I've got another question because it's least over the last sort of year or so has been really topical is all the changes in mortgage rates. And I was wondering, as someone coming into the market, what sort of considerations do I need to have? Because of, sort of get thrown around like getting on a fixed rate or a variable rate, and what does that even mean, number one?
Yeah.
And then also like, how can I know the rate I'm going to be paying today is going to be sort of roughly secure over the next, 5, 10
Yep.
years or so?
Yep. Okay, so a fixed rate, you generally have terms of 1, 2, 3, 5, 7 and 10 years. There are lenders who will do a couple in between. So that will give you your guaranteed rate. So if you're wanting a guaranteed rate in 5 years' time, you'll take a 5-year fixed rate at the moment, which I particularly wouldn't recommend at the moment because we are seeing the variable rates go down. So the variable rate will move with the market. It will increase and decrease with the market. The Reserve Bank sat on Tuesday and held the rate. We are anticipating, or economists are anticipating, another rate cut. Has anybody got a crystal ball, Hanif? And some lenders are coming out with some lower fixed rates at the moment. And I have had quite a few queries about it. I would still personally sit and wait because I do think there's still room for movement. There's a couple that are coming out with a couple of good 1-year and 2-year fixed rates, but it's still just sitting above the variable, and a couple have actually just come under, but with the way that the market is. But again, we've got to take into consideration the people's circumstances, because if they feel more comfortable with knowing if it is a first home buyer and they just want fixed rates, now is an okay time to fix as well, because that's what suits their circumstances.
Yeah, and I guess it goes back to, without, plugging you too much, but having the broker in your corner, you sort of I suppose you're giving a bit of advice saying, hey, this is what we, like with our sort of expertise, this is what we expect the variable rates to do. Our guess is as good as anyone's, but we expect it to do this, or you could have a fixed rate. And you're sort of giving people the information to sort of say, like, this is what the different scenarios are. Is that what's
absolutely.
happening?
And you can also hedge your bets. You can do what we call a split rate. You can fix a portion and have some variable.
How does that work?
So you just have 2 loans, and you say you might choose to fix in 60% on a fixed rate, and that will just be stable, and you'll just pay your minimum monthly repayments on that. And then with your variable rate, if you've got extra income that you're anticipating to come in, you might have a bonus or something throughout the year, then you have the flexibility to pay that into your variable portion, and you can have access to that throughout whenever you need it.
Right.
So just to clarify that, with a fixed rate loan, they tend to come with a lot of restrictions, such as most lenders won't allow you to pay any extra in, and you can't have redraw on it. There are exceptions to it, so some lenders will allow a certain percentage each year. There is one lender in the market who will allow redraw on a fixed rate, but with that particular lender, you can only pay an extra $30,000 in over a certain period of time. So again, there's different lenders who have different criteria. But with your variable rate, you actually get a lot of flexibility where you have no penalties. You can actually pay in as much as you like. You have redraw, access to your funds. You can have an offset account should you wish.
Yeah, okay. Just could you explain what redraw means? Because I understand paying more into it, but what does the redraw mean?
So if you're paying more into it, or you have a lump sum payment or something go into it, and let's say you're ahead of your loan by $20,000, though you have access to those funds, you can actually go and access those funds and redraw that back and utilise it however you wish.
Right, okay. Do you see that commonly happen? That's the first time I've ever heard of that.
Oh, really?
Yeah.
Yeah, it's utilised quite often. Yeah,
Okay.
We see clients using it all the time.
Fantastic.
It's a great way for people to save for that holiday they want, or that emergency that sadly might come up, or, anything.
Yeah.
A new car, cheap way to get a new car rather than a personal loan.
Right. But like you were saying, you usually find restrictions on that if you're on a fixed rate.
If you're on a fixed rate, yeah, there's only one lender that I'm aware of that will allow redraw on the fixed. There's just a lot of restrictions around the fixed rate, but you've also got the benefit of you know what your repayments are going to be. That's not going to vary. You're not riding the market with that.
Yeah.
It gives you surety.
Yeah. I often, because I'm not in this area, I'm not looking at what the rates would be. Is it typically, my assumption would be that it's typically a fixed rate will sort of be a touch higher, but it's sort of that gamble of like, well, if I fix it in now, it's likely to be fixed so that I know that repayments are going to be the same. There's sort of that, I suppose, security around that. Is that usually why people choose to do a fixed rate?
Yeah, it's a hard one because I think, again, it depends upon everybody's situation. So at the moment, we're having... Hanif touched on the fact that we do keep in contact with our clients. We do that every year. And at the moment, we do that every year to ensure that the banks are actually giving them the best rates possible, and also that some people's fixed rates are coming off. So we want to negotiate the best variable rate if they choose to go onto a variable rate. And I've just had some clients come off at a 1.99% fixed rate, and I was like, that's amazing. They actually fixed that in about four or 5 years ago at 1.99. So they fixed in at a great time. We had a lot of clients fixing back then at that time, not so many now. But so I guess the answer to your question is actually it does depend upon what the market's doing, when we see people fixing or going variable, and also it does come down to their personal situation.
Okay. I've got one last question.
Great.
I think unless there's something else comes up. What should I look for in a broker? Like, what makes a good broker? Like, for example, you were saying, you guys and your team, you're, checking in each year to make sure that they're getting the best rate, and that maybe that's something everyone does, but maybe probably not as well. What sort of other things should I look for in a broker?
I think experience is definitely there. Not to take away from people who have just been newly trained, because they might be able to pick up something that others can't. That's why I particularly like our team. We work together as a team. We're always flying ideas off each other, and somebody might come up with something else that somebody else hasn't done. So I do love working in our team. I feel really honoured to work with the calibre of the people in our team for that reason. But transparency, authenticity is definitely one. Get to know your broker. I think, we've got to get to know you. Every transaction, it's not a transaction, it's a person and it's their life. We've got to do the right thing by them. We want to get them to where they want to be. We want to be on their journey with them and guide them in the best possible way. So I think they're the things that you should be looking at with a broker, that and expertise.
Fantastic. That's a good way to end it. I just want to do the Hanif thing. Hanif, if you put the link in the description.
Hanif, can you fill my water, please?
So if people have questions or just want to find out what's possible, are you happy for them to reach out?
Oh, anytime. That would be wonderful. Love people, love helping them. Want to see them in their first home.
So
absolutely.
They find you at the finance agency. Jeremy will put a link down the bottom, and you're Paula from the finance agency. financeagency.com.au.
Yes, absolutely. Please reach out anytime, guys. We'd love to hear from you.